Thank you for joining iMeet. When you hear the tone, you will be the 17th person to join the meeting. This meeting is now being recorded.
Hey everybody, good afternoon. This is David Blake with Tuesday Tech Talk. And we're going to quickly review the last couple of days in the market, try to figure out what's going to go on from here. This is your first time with us. We usually talk about 20-25 minutes, and we open up to some questions. You can ask about individual stocks or indexes or just anything about the market that you'd like to ask. And then we try to open it up again for the questions. What we're going to do today is we're going to take a look at what's going on here the last couple of days, but then we're going to try to get a game plan going out for the rest of the year. We started the fourth quarter with a bang yesterday, and we want to see where we can try to make some money and close out what's been a pretty good 2017. So let's start out real quick and just kind of look where the market is at this stage. Okay, here's the Dow first off. We have you can see this upward moving channel over here that we have going through here. The CTI finished last week at 13. We're going to, that'll slip down to a plus 11 for the next 3 weeks, which is still positive. That will take us into November. And we have a little bit of we go negative for a couple of weeks in December, which I could actually make sense. When you have returns like this, a lot of times you'll have some financial professionals take some money off the board to kind of lock in some profits, especially if they're beating the different indexes. But anyway, we have had a nice little pop here the last couple of days. We had the portfolio addressing for the end of the quarter. We had a little bit people. If you're not familiar with window dressing, that's where the hedge funds and portfolio managers try to buy some of the big winners over the quarter. So when they when they send out their quarterly statements, it'll show that they own those stocks that they're hearing about in the news. So that's what they call window dressing. They just try to fluff up what they own for their clients, so they don't get yelled at for not owning Google or Apple or something like that. Okay, the momentum was a neutral +3 last week. That was one of the reasons that the Dow Jones underperformed. It gained just 0.2%, about 55 points. S&P 500 was up 0.7%. Nasdaq picked up 69 points, 1.1%. The Russell 2000 surged 2.8%. That was the second week in a row that's really put up some big numbers. And that small cap rally has now extended for about 4 or 5 weeks now. And we're up probably about 11, 12% in the Russell since about August 21st or so. So breadth was strong. Technical indicators at this stage pointing to higher highs, and we're a little bit overbought. Could do some consolidation time, but let's take a look over here, down here. This is the 14-day RSI. You can see when you get up above 70, it shows that you're overbought. However, in a trending market like this, I don't pay that much attention to the overbought unless it gets up over 80 or something like that. The reason being, when indexes and stocks are trending, they're overbought for a reason. That's because more people are buying into it. Here's the AD line. This is a moonshot right here. This is not a sign of a market that's getting toppy or getting ready to roll over or running out of gas. This is showing more and more participation in this rally. It's picking up steam. This generally you'll see this thing ideally start to roll over a little bit about maybe 2 or 3 months before you'll start seeing sideways action before that market moves over. Now here's the 52-week new highs and new lows. We've been asking for a little bit of expansion in this, and we're starting to get that now. We're almost to the highs where we were at the beginning of the summer. New lows are down here, not doing very much over there. This is bullish. This again just shows you that not only are we breaking out to new highs, but the number of stocks breaking out to new highs is also expanding. That's along with the accumulation distribution line. It's just more signs that this rally has some legs and it can move higher. Now here's the S&P 500 again, marching up this upward channel. You can see right here we are at the top of this, at the top line of this pretty distinct channel on the S&P 500. So I can imagine you maybe get a little bit of a throw over. You get to around 2540, you might have a little bit of sideways and maybe a little bit of profit taking in the short term. Your momentum still remains positive. Good accumulation in that. You're staying above 80 on your 30-day stochastic. If you're new with us, I like the 30-day stochastic because as long as it's above 80, that just shows you that the trend is still strong. Here's the Nasdaq. The momentum is a little bit slower. It's kind of strange. Oh, one thing more with the S&P 500. What I check a lot of times is the number of stocks that are within 1% of making a new high. And right now we're at just over 28% of stocks that we follow are within 1% of making a new high, and only 8% are within 1% of making a new low. So again, that's also confirming that the rally here is strong and has a lot of participation. Now, one of the things with the Nasdaq, we had a good week last week. We had this little kind of rolling over, and then we popped up again. One of the things that they hear on the talking heads on TV is that the FANG stocks have had it, and they're going to, they could even pull the whole market down. I don't see that as happening at all. The indicators, like I said, we had a little bit of slowing of momentum. Nothing wrong with taking a pause because we had a huge spike over here. We consolidated all that, and now we're starting to break out again to new highs. We're underperforming a little bit today. We're up about 5 points, but I think this, the rotation out of some of the FANG stocks is actually good. I don't see those going down 15, 20% by any means. The long-term story is still good. In fact, I would probably recommend with some of these stocks like that you go in here on our charting package, smart charts, draw in some support lines, and maybe put a buy ticket in if you don't already own some of them to nibble away at some if you can pick some up. Because for the long term, I think you still want to own those things. And as you'll see over here, this is the before I get to that one. Okay, here's another one. This is the Nasdaq Advanced Decline line, just like the New York thing. A lot of this is because of the small caps that are in the Nasdaq. This is another moonshot. This thing's just flying up, broad participation in the rally. Because the FANG stocks are overweighted, that's why you're not seeing the Nasdaq have as much momentum as the Dow and S&P 500. But this underneath that line, underlying progress in the index shows you this thing is going to keep on moving higher on the Nasdaq. So don't be afraid that the market's getting too toppy in here. And here we have the best expansion we've had almost all year in the Nasdaq as far as the number of new stocks making new highs. Again, this is confirming that the Nasdaq can move its way higher. Okay, now this is the OEX, the S&P 100. This is comprised of the bigger cap stocks in the Nasdaq. The FANG stocks all belong in this thing, and this is not a chart that looks like it's falling apart that you need to sell all your FANG stocks and get out of it. Just be glad you got a little bit of a consolidation in those things. They basically have they're what's propelled the stock, the broader market upward all year long, and for them to take a little rest in here and we rotate into some of the other sectors that we talked about last week is very bullish for the broader market, and also helps us point to new highs. As those FANG stocks begin to maybe pull back a little bit and people start to accumulate them again, and they start to pick up again, that's just going to be even stronger for the broader market. But this is also telling us that besides the FANG, there are some other really good big cap stocks. One of them is Intel. If you haven't looked at Intel lately, Intel's been breaking out the new highs with the semiconductor index. Pays a great dividend if you're an little older guy and you want to participate in the semiconductors but get paid for it. That's one that you could look at. We talked about Cypress Semiconductor several times. That's paying about 3%, and that's breaking out the new highs also. So you can get some of these larger caps semiconductors and get paid while you're watching them move up. But stocks like Intel and some of the other ones, maybe Microsoft, are showing that the technology stock rally is not dead by any means. Okay, now we're going to just look at real quickly before we move on to some of the different sectors and get our game plan going here. Now this is a 2-year chart of the Russell 2000. You can see back here at the election right here, once they came in with the Trump trade, they spiked up, and then they basically did nothing. I mean, as of about a month and a half ago, the Russell 2000 was flat for the year. We're now just getting this breakout over the last couple of weeks, and you can see this thing coming up here. We're at 1505 earlier today. Right now we're at basically 1505 again. So this thing is breaking out of this point. You got a little bit of resistance up here at 1505, and we can move higher on that. Looks like as high as 1600 on that. Small cap stocks are the ones that will benefit the most from any kind of tax reform that we have, and so when you get a big consolidation like this, it's lasted about 8 or 9 months. When you do get the breakout, it generally will outperform for quite a while, and the momentum will carry it. This should carry it through the end of the year. You can see the MACD is supporting it. Almost getting overbought on the 14-day RSI, but on the weekly chart. But it still looks good, and you want to be exposed to the small caps, maybe especially the small cap technology and the small cap infrastructure play, some of the materials and that type of thing. Okay, here's the got it, Chuck. Here's the transports. We're going to look at this real quick. Again, kind of the same thing. Here's the election. Boom. This is a 1-year chart. Came up here. We spiked up, on the deregulation, all that kind of stuff, and we kind of moved sideways. We had a couple fake breakouts here. I had a fake breakdown here, but now again we have an 8 or 9% or 8 or 9 month breakout here on the transports. That should carry us further. And during this time here, we also, one of the things I wanted to point out, we had about a 20-some% pullback in the airline stocks. I want you to take a look at stocks like they're moving now. They've moved about 4 or 5% over the last week or two. But look at SkyWest, SKYW. Also look at Spirit, SPR. And you can also take a look, I think, in here, the Delta, DAL. And those are probably 3 of my favorite ones. You can also go to Alaska Sky Airways. A couple of those smaller ones should do well. Again, they've corrected about 20-25%, and they should be moving high here with this breakout in the transports, which is also confirming the move. Here's the AD line down here on the transportation index, and you can see that also breaking out. This is institution buying of that. Overbought because this is from here around August 21st to where we are right now. That's probably about an 11, maybe 11% move from in just over a month. That's going to have to consolidate a little bit at some point. Trucking stocks are one of the things that have really moved this thing up here. I haven't been following the railroads too much, but a lot of trucking stocks have done real well. Airlines, in fact, today are the number one the industry group today. We had a question on home construction stocks, which we'll go over. They're also moving up today. They're like the 3rd or 4th best, strongest sector. So we'll take a look at that. Okay, over the last week, including this morning, what we have for the best performing sectors, and we talked about this last week if you joined us. We were talking about the rotation that's going into financials, also energy, and materials and healthcare and industrials. You can see these things all were up strongly over the last 1 week, and I think that the momentum in these things should carry us through probably into December. As far as what was weak last week, you had some, you get some profit taking as the interest rates move up. People are selling their REITs. They're also selling some of the consumer staples that are expensive. We talk about that several times when interest rates will start to move up. These consumer staples are trading upward around 20 times earnings. Historically, they're going to trade around 9 or 10. So they are expensive, and you're also finally getting that pullback a little bit in the utilities, which is good. Utilities have had a heck of a year. They were up. Let me look real quick here. Utilities were up for the year. There, you got utility index up about 10%. It's actually, and the transports are up now 10% too. So they're just lagging a little bit from the growth of the S&P 500 stuff. That means the utilities have outperformed, and they're due for a little bit of a pullback. So that's what we have going out for the thing. What I want to do now is, over the last couple of weeks, we've talked about the rotation and where we want to go with some of our money. If we want to lighten up on some of the some of the ones that the big technology stocks, where can we put some of that money? I don't think if you own them, you want to just sell them, but I probably would wait and just see what happens here over the next week or two as this rotation continues to take place. Let me get over here. Okay, here's the financials. We talked about this again this last week. If you I had Rich pull up some of our the stocks that we talked about last week, and they've almost all of them except for one of them were up. We had Citigroup was up almost $3 this week. Bank of America is up almost $1 since last week. American Express was up $1.85. STT, I think it was State Street, up $2.50. Fifth Third. PNC Financial was up $2.70. So we had a lot of these stocks that were breaking out. You can still buy these. So this is this is the 1 year chart. You can see again this when you get a consolidation like this, what we had in the financial sector, and a lot of this was due when you had hints that we're going to raise rates, and then they didn't raise rates. Okay, now we're hitting back as the economy begins to strengthen again. Rates start to move up again. You can see here also in the accumulation again. This is still under accumulation. It's just, and I think you can have, these bank stocks can go up quite a bit from here. They were beaten up big time. This here in the last week, the XLF, which tracks the banking stocks and insurance and that kind of thing, actually just now got back to where it was in 2008 when the financial crisis began. So a lot of these stocks that you'll see in here, like Bank of America, they're starting to move. I don't know if they're going to get to their old highs anytime soon, but the upside is there. You can have like a Bank of America where you get in at 25, and you can see this in a year and a half or so, maybe at $35, $40, which is a good 35-40% upside. Stocks like J.P. Morgan and American Express and some of these other the PNC Financial and State Street, they've got a lot of upside to them, and I think that you can go ahead and buy these things. We've been talking about buy these things on any kind of a pullback. So because of this, I think that you're going to get some heavier buying going in. Again, you're a little bit overbought, but you want to see that as things are breaking out. Okay, here's another one that we liked, the technology sector. You're breaking out here. You had this little pull over here with the FANG stocks everyone's talking about. The momentum isn't quite there. You're still lagging a little bit today. I think, let's see, today we are, it's up almost 0.25%, but nothing big. I still think you can buy some of these, the smaller semiconductors. Take a look at some of these stocks that, the technology is going to catch up. It was due for a pause. It was one of the leading groups most of the year. And, we're still above this 40. One of the things when you're looking at something trying to correct on the 14-day RSI, you want to see the line stay above 40. And we're still back up here around 60 or something like that. So this thing is actually starting to pick up momentum again. Accumulation all the way up, even on the pullbacks over here. Part of this you would see is because of the overweighted FANG stocks when they sold Apple and some of those. The broader sector was still under accumulation. So I still think you want to be part of that group. Okay, we have the next one I want to look at is materials. We've been talking a little bit about this. A nice upward channel. You're kind of breaking out above this upward channel, and you are overbought. But look at the accumulation breakout in this thing too. You had kind of a steady buying over here. Now you're getting a breakout to this side. Now this is going to be a play on the infrastructure. You can still buy these stocks. Look at some of the cheaper ones, some of the small caps. There's a stock Builder Source BLDR. I'd like the chart on that. Of course, the Home Depots and Lowe's that are not really materials based, but they are especially consumer discretionary. But the materials sector, you have the copper still strong. The crude oil is still strong. Lumber. We had a whole webinar on this several weeks ago, and we gave you a whole lot of different stocks that you could buy, probably 20 or 30 stocks. Actually, if you go on the markets page, and you go to play this week's webinar, there's a little YouTube thing in the right-hand corner. If you click on that, it takes you to YouTube, and you'll get you can find all the older webinars that we do. If you go back 3 or 4 weeks on them, you'll see there's probably a list of 20 or 30 stocks in the materials sector that you can pick up that look good then, and they're still moving higher. So again, you have this thing here. We're breaking out again on the materials. We broke out of this channel, a little overbought. You could get a little bit of consolidation before you move higher, but you want to be in that sector also. Okay, here's the healthcare sector. We had a little bit of a pullback here. A lot of this happens when they start talking about trying to revive and take care of the Obama plan. You saw this as we started to pick up again, and the Republicans tried to roll out, take another shot at another health care plan. That rolled over, and now they've kind of tucked that away again for a while, and you're starting to get an upward break on the healthcare stocks. You can buy those right in here. And we always talk about the Biotech's IBB, which is in here. Again, you can see we're starting to break out again onto this thing up to new highs. You're going to starting to see the accumulation again. You want to own a basket of these things, and and you want to own some of these. You don't just buy one and stick everything in one of those. You want to have like 4 or 5 of them, and where you could at least trade if you get something that gets an FDA approved. When you buy it at 10, goes to 15 or 16, you can sell half of it and see if it's going to pull back and buy some more. And if it doesn't pull back, you leave the rest to go. So again, this we want to own going out for the rest of the year. The last one we want to look at right here real quick is industrials. Again, we have another breakout. Here's this thing here that broke out. Big accumulations. Accumulations are starting to break out. But the reason we would like this is the ability for these companies to bring back cash. They're going to be putting that to work, whether it's through stock buybacks or whatever they're going to do. And this is a good opportunity that you're just starting to see the breakout in that. Again, this hasn't moved that much, the industrials. You also, part of the upward bias on this thing is was the weaker dollar. But we'll look at the dollar. We've talked about that before in the past. I think the dollar has bottomed, and I think it'll work its way higher from here. But still, overall, it's still fairly cheap. And I think that with the global economies also powering forward that we see around the globe, you're not going to get a big spike in the dollar from here because the other economies are strong enough that their currencies won't let the U.S. dollar run away with anything on that. So multinationals look good, especially the multinationals that have a lot of cash overseas. Again, that would help something like an Intel. I think you should probably own in here. All right, we talked about this last week about the rotation, especially going into financials, and especially going into the energy sector. Here's a long, downward thing. We've been kind of bearish on this. We got bullish over here, kind of head faked this out, and now we liked it again. This has enough momentum here. You can see we're really overbought. But look at the accumulation. This isn't you and I buying these. This is the institutions and hedge funds going back into the energy stocks. You have a lot of talk right now that there's, that we had resistance up around 52. That was my target on 52, but I'm going to raise my target. And here's one of the reasons why, to back that thought up. Okay, here's from last December, the high all the way down to where we just bottomed out here in August. Okay, when you have a move like this, and you have this is the Fibonacci retracement lines. Okay, we came right up to the 50% retracement from this whole move all the way down. Okay, that's bullish because, number one, what's this telling you? You're showing this accumulation. You have the natural space right here at this 50% where you're going to take profits. If you're a trader and you still don't like the longer-term picture on oil, you think electric cars, everything else, okay, this is where you're taking your profit. Now, this is actually a bullish divergence, and that's telling me that even though you've had this 4 or 5 days here where you've kind of bounced off of this resistance line, okay, you're gonna break through that thing. And if you could break through this next one up here at 70, which would be the 61.8% retracement, that means you're going to retrace this whole thing, and we could see a run back to 60 on crude oil prices possibly. I'm hoping we kind of just kind of go slowly. I don't want to. It takes a lot to fill my car up, but I want to. But this is telling me that even though we've had a couple of 4 days or 5 days where the oil stocks are just kind of churning sideways, this bullish confirmation down here tells me this is going to break out to the upside. You're going to get another breakout of this, and I would expect crude oil. Right now we're at 50.34. I think you can bank on that going to $52 and maybe as high as 55 here. That's going to be enough momentum. This right here to last on the crude oil for that rally to probably stay up in place into December. So a lot of these things, like with the Halliburtons, and again we talked last week about different stocks. They're kind of mixed. We talked about the symbols on them were ESV, Diamond Offshore, DO, Noble Drilling, NE, Rowan Company, RDC. We liked Halliburton last week. We told you about that. It's up 90 cents. It's a good one to buy. Schlumberger, SLB. You want to own some of that, 50 cents. Apache, APA would be one to nibble away on here, and Darko APC. SU is a good one. Suncor Energy, you could be buying some of that. Murphy Oil looks good. Phillips 66, PSX, that's up over $1 from last week. And even Occidental Petroleum, OXY. That's a list of stocks that you want to have exposure to some of the oil stocks going out to the rest of the year. And if you get a good day where, say, if crude oil breaks through this and energy breaks through this 50% retracement, and you get a pop to $52, don't be in a rush to take a profit this time. And I think you can. We'll see if we can get up to 55 on that. Okay, this is something we've talked about over the last several months. This is the ETF for the dollar. UUP is a symbol. We had this downward trend line, and then we kind of broke apart. I thought our bottom side target was $24 on this. We actually broke down to about $23.70, so we missed it by 30 cents. Not bad. What I want to watch in here, this is a possibility, although it may not happen. But if you see this thing come back down here and test this $24 range again, where the dollar weakens, and then we start to head back up, you're going to have a reverse head and shoulders, which would give you if that happens, and we break this the head and shoulders pattern, that could give you enough momentum for the dollar to get back up here closer to the 200-day moving average. Not sure it would get up to that, but I think it would get up to around 25 and a quarter, somewhere around that area. Maybe $26, which would be about where you probably want to expect that thing to probably slow down at that point. You're not seeing the big accumulation on it yet, so people aren't sure this thing is bottomed yet. Just my opinion is, like I said, maybe we get a little bit more of a pullback. The next thing is time it starts to go, you're going to start to see this accumulate and people start buying the dollar again for a little bit more of a trade. Now, this also, while this stays weak, helps the materials and also helps the price of crude oil. Okay, this over here, one other thing we want to look at. This will be one of the last charts. I got a couple questions coming in, and we're going to try to do that. Okay, this is the ETF for the 10 to 20-year Treasury bond ETF. It's TLH, Tom, Larry, Harry. This is the actual bond price. As this price goes up, the yield goes lower. Okay, right over here with the yield on the 10-year Treasury was right around 2.06. After this last FOMC meeting and some more economic data, we've gone from 2.06 to about 2.33. Now we've broken this upward trend line. If you want to go back to a Fibonacci retracement from back here at the election, well, that's not an election, but where we peaked out here and we retraced almost all of it from the election, you're going to find support over here, the 50% retracement, down here at the 200-day moving average, which means I would think we could get up to close to 2 3/4 on the 10-year Treasury yield. Anything above 2 3/4, between 2 3/4 and 3%, is going to be a red flag to me. That's going to be a little bit too fast, too far, too quick. That's going to be one of your things that you want to keep track of. And what's the problem with that is then all of a sudden it starts to get, well, hey, I can get 3% without any risk on the treasuries. Maybe I'm going to back off on my stock holdings a little bit because I want to diversify and buy some of this. I haven't got dilly in my fixed income investments for years now. I'm going to go ahead and take a little bit of risk off. So that would be a red flag for you if we get that. The other thing that could cause that would be if inflation as the economy starts to heat up, if the economy heats up too much, we start to see an uptick again in inflation. And there's always the risk that the Fed is behind the 8 ball on moving rates higher. So keep an eye on that TLH and watch the C of that, and also on the U.S. 10-year. 2 3/4. I think we can handle up to there. That would be fine. Another thing to watch on this thing would be if the rates start to back off again and then they start to plug again, you could be looking at a possible head and shoulders, which would, unfortunately, that could take rates, to that 3% or so. But anyway, that's what you want to keep in mind is that 2 3/4 as far as something that's going to wreck it. Okay, we've got some. I had a couple questions come in earlier that I want to go over right now. I see we've got about 3 or 4 more coming in. Let's see, who was it? Somebody, I think it was Mitch, wanted to know about TQQQ, which is the leveraged, triple leveraged ETF. Mitch, one of the things we have that we haven't done so well out of this year, we do a little portfolio where we buy 4 of the ETFs. We buy the Dow, the S&P, the Nasdaq, and the Russell 2000. We're profitable for the year, but we're only up about I think about 8% if you've gone long and short. We haven't made any money this year on the short side. We've had corrections in the Russell. Both times we went weak on the market. But if you buy those and you just send me, what you wouldn't know if you should just day trade those things. I don't think so. Even though they rebalance everything at the end of the day, if you go in and out of this thing daily of those things, you're going to eat so much up in commissions that you're not going to make any money on those things. My what I found to be the best way to play those is to maybe look at anywhere from a 2-week to maybe a 6-week time period. If you follow the CTI, a lot of the times, like if you buy that now, you could probably hold that TQQQ and hold on to it here in through the end of October. And that's what I would look at. Just we went long on September 1st. We went long TQQQ. The other ones are just moving up, 4 and 5 and 6%. But the Russell's up, I think 16 or 17% on the triple thing just since the first of October, or 1st of September. Okay, we also had Ping Lee wanted to know about which homeowners to buy. As far as the homeowners go, I think they got some more upside. The one I like best is DHI. The second one I like best is TOL, Toll Brothers. I think you can still buy PHM, which is Pulte Home. My least favorite of the ones that she liked was LEN. I think Lanier either came out today or they came out tomorrow with earnings. But I see the most accumulation from the institutions in DHI, TOL, and the third one would be that PHM. Okay, let me grab these questions here real quick, and then we'll see if we have to share our thing. When would it be sometime to buy the FANG stocks? Can you do one of the charts? Linda, I think if you go to the FANG stocks on our smart charts and look at those and draw in like some support levels. If you click support at the top of our charts in Market Edge, it'll draw a support line. I'll make a note that we'll look at those for next week because I want to go over those real quick. But if you have the smart chart draw in the support line, that would give you an instance where you could buy them. Lithium stocks. That's going to have to be something also that I go over next week. I don't want to be talking about stuff that I'm not up on. So I'll put that down to go over next week. Here's a couple stocks there. I'll share this thing on that. What did you think about shorting volatility at this point? I wouldn't short. Don't short the volatility in here yet because the reason being, you might get lucky one day. But I think the market's going to. Everything's too strong right now, and you're jumping in front of a freight train, which you don't want to do. And that's this thing we could have another one of these days where you go 200 or 300 points. And I don't know how low the VIX can go, but when we start seeing a little bit of volatility pick up, which could be a little bit later towards the end of the year, maybe we'll look at that. We did one of those webinars on that before, but we'll take a look at that again here real soon. Okay, I want to shut this down and share the screen for a couple stocks. let's see here. If you have any other ones you want me to look at, go ahead and throw them in now. Okay, you should be able to see, can you see that, Rich? Okay. All right, we're going to take a look at SQM first. SQM. Okay. So see, this is a different foreign stock, an ADR, I guess. Not sure what they do. Boy, this thing's all over the place. You were so overbought all through on this last spike, and I don't know what they do. You're kind of catching me out of bounds here. It looks like you're getting, this is staying above 50, which is good. This is stayed above 50. That's good. If I'm looking at this thing, if I'm familiar with the company, I could give you a little bit more advice. But it does look like it possibly, you might have held this 52.50. You might look to buy this thing on a trend point. I'd hate to tell you not to buy it if it's, I don't know what it's doing, but the indicators to me look like they probably bottomed out and you're getting a new wave of buying going into it. So, I'm sorry, I can't follow all these things, and that's one that I really don't know anything about. I'm sorry about that. Okay, FMC Core. I like this. This is another group that looks good. Accumulation is okay. They had a little bit of a pullback. They went below 50, but now we're back up. So you're getting buying coming back in. You're going to have a MACD giving it a buy signal, and we could probably get a buy on this thing. It's in a good sector. You can probably see this thing move its way a little bit higher after this pullback. ALB. Is that ALB? This one too, I like this thing here. You're breaking out to new highs on this, but it's in a good sector. Look at the accumulation on this. Again, this isn't you and me buying this. This is the after several months of just kind of trending up. Well, this goes sideways. Now you're getting confirmation of higher prices. You're overbought. This is you got some this is some negative divergence, which tells me that you may this little pop here over the 2 or 3 days there. You may get a little bit of a pullback to that thing. I don't think I would chase it in here today, but ALB I would look to add to positions maybe here around this 130 mark if you can get a pullback. But it looks to me like once it corrects down to this pivot point, that you could probably move higher on that. So it's a good stock that's somewhere where you want to be. Here's another question. What do you think about shorting volatility at this point? Okay, BA. Boeing, again, you're in the right sector, that's for sure. This is another one. It's hard. It has such a moonshot. Now, you are getting some consolidation in that. A little bit of, you're overbought. You're working off your overbought position on this. I think Boeing moves higher. Still got a good accumulation, even while it's, this thing's going sideways. This thing's still moving up. Boeing can be, you can add to your holdings in here. I think, Boeing goes a little bit higher, and this thing here probably gives another buy signal on the MACD. You're in the right, aerospace and defense. That's one that looks good. There's a little stock, KTOS that you may want to look at too. That's a cheapie. They just did they made a new high here about 3 or 4 weeks ago. They came out with a new secondary, knocked the stock down about almost $2. We mentioned it either last week or the week before, and it's breaking out the new highs. Once you get that's in the aerospace and defense sector too. KTOS would be one if you're looking more for a trade. Okay, here we go. Anything else in here? Okay, we're past my limit on this again. Chuck asked me to take a look at European banks or European equities. I still like those. I think that you're probably going to get a new leg up in the European markets. Their economy is still good. Rates are at zero, and they're coming out where we were probably several months ago. And I think that you can be adding to positions over in Europe right now. The emerging markets are a little bit frothy, but especially if the dollar starts to work its way a little higher, you may not want to own the thing. But we'll look at some European and foreign markets next week. That's European markets will be FANG stocks. look at some lithium stocks. Okay, hey Chuck, like I just said, we're gonna cover Europe tomorrow, next week, and we'll look at some of the stocks to buy in there. But I do think it's something that you want to be buying in there. Okay, and which EU bank? ING. ING looks good to me. HSBC had a little bit of a pullback because they got fined. Pays you almost about 4%. HSBC. They're based out of London. However, they also have big operations in China, which I think is good. They have real good exposure over there. Last week I told you we added BMA, which is Argentina bank, to our portfolio. That's up about 5 or 6% since we talked about that last week. Don't be afraid to look at some of these South American banks either. Their economies are starting to grow too. Places where you might want to look at that and go on some of these banking stocks. Go to Trading Ideas and look under stock analysis and look for the upgrades, and then look at the ones that have a relative strength of about 1.03 or higher. Those are stocks that may have been going sideways for a little bit, but now the technicals are starting to prove again, and you can usually pick up 3 or 4 of those. Also on the point and figure early alerts and breakouts, you can find bank stocks that are breaking out on that. And when you look at those two things we've talked about before in the point and figures, when you go in there and all of a sudden you start seeing maybe the smaller banks starting to break out on the point and figure charts. That's when you start to see something where you're going to have like 5 or 6 of them in the same industry that are relatively the same. That gives you confirmation that you're in the right place, and it's not just one bank that's taken off here. You got them all going. So again, as far as the European banks, ING and HSBC is one that I really like, and we can cover some more of that when we talk about Europe next week. Okay, I'm going to wrap it up in here. This recording will be up in about an hour. I really appreciate you taking time out of your busy day to join me in this. I hope you all got something out of it, and you're going to make some money. All right, have a good week.